Welcome grade 12s. In today's lesson, our emphasis is going to be on the VAT ledger accounts. Right, let us start with the output account first. Now remember that your output account obviously deals with monies that we owe to SARS. And why do we owe money to SARS? As a result of all the cash that we have collected. Right, keep that in mind, and remember that we treat this account as a liability. In other words, that is the amount that is owed to SARS. Right, the first entry, number 1, says debtors control, and this deals with credit sales. So obviously your entry is a debit to debtors control, a credit to sales, and a credit to VAT output. So that deals with credit sales. Number 2, this entry here deals with cash sales. Because we are selling for cash, we are debiting bank, and we are crediting sales, and we are crediting our VAT output. So there's your credit sales and your cash sales that have been dealt with. The third entry that you see on the credit side of the output VAT account, you see, is discount allowed. Right, what does this entry deal with? This entry here deals with the discount that is cancelled. And why is the discount cancelled? Due to a dishonored check. As a result, the discount has to be cancelled. So that's the entry that you see, number 3. Number 4 is drawings. When the owner takes goods for personal use, then the entry obviously would be a debit to drawings, a credit to trading stock, and a credit to my VAT output. And this deals with drawings, so it shows you that not even the owner is exempted from paying VAT, and this is where the owner takes goods for personal use. Right, let's go on to the debit side, dealing with number 5. Number 5 deals with debtors control, and this one here deals with returns and allowances by debtors. Double entry, once again, a debit to debtors allowances, a debit to my VAT output, and a credit to my debtors control. So this particular one deals with returns and or allowances. Number 6, let's go back into our ledger account. The entry that you see on the debit side of the output VAT with regards to discount allowed, it's labeled as number 6. Right, now when dealing with discount allowed, let us take the double entries into account. Firstly, you're going to debit discount allowed and credit debtors control. The second part of the entry is where you now debit the output VAT account, as you can see, and you're crediting your discount allowed. The reason you are doing this is that in the discount that has been allowed, there's a component of VAT that we do not owe to SARS anymore, and therefore we are decreasing the output VAT account. The next entry that we deal with is your bad debts. So the entry that's number 7, remember, when dealing with bad debts, what's my double entry? It's a debit to bad debts and a credit to debtors control. But within the bad debts, again, there's a VAT component. So therefore, we will credit the bad debts and debit our output VAT account with our details being bad debts. That's this entry here, number 7. Once again, you can see that on the credit side would be all the amounts that we are owing to SARS, and on the debit side would be all the amounts that would reduce the amount that we are owing to SARS. What happens with this output VAT account? This output VAT account now has to be closed off, and when it is closed off, you will notice that the amount will be transferred to a VAT control account. More about that in a jiffy. All that you have to remember is you're going to debit your VAT output and credit your VAT control account. Let us now take a look at the VAT input account. Okay, the input VAT account, remember, is an asset. It represents the amount of money that SARS owes to us. Right, the first entry on the debit side is creditors control. What does this represent? Number one represents my credit purchases. Once again, the entry, a debit to trading stock, a debit to my input VAT, and a credit to my creditors control. So this can show you clearly that as a result of us buying on credit, we have paid VAT, and therefore SARS owes us that amount. Secondly, number two represents cash purchases. And what do we mean by cash purchases? By cash purchases is when we pay by check. For example, if we bought equipment and we paid by check, and we paid VAT on that equipment, here's my double entry. It's a debit to the equipment account, a debit to my input VAT account, that's the amount, and a credit to my bank because that's the amount of money that is leaving my business. Okay, number three deals with petty cash. Right, if we bought items and we paid VAT on those items from petty cash, then definitely you can see that the entry is going to impact on my VAT input account. And once again, I'm crediting my petty cash with the full amount, debiting the item that I bought, and debiting my VAT output with the amount represented by the purchase from my petty cash. Okay, let's go on to the credit side of this account. On the credit side, the first item that we have there is creditors control, and obviously this refers to items that we have bought on credit and that we are now returning to our suppliers. Okay, so once again, returns and allowances, what does it do? It decreases the amount that SARS owes us, as a result of which now we are reducing the amount that SARS owes us and we are crediting the input VAT account. By the same token, when we receive a discount from our creditors, and what's the entry for the discount that we are receiving? Remember that you will debit creditors control and credit discount received. However, there's a VAT component in there which you will now debit discount received and credit your VAT input account with the amount of the discount. Once again, you can see that this account needs to be closed off to your VAT control account. Okay, grade 12s, that completes the VAT input and the VAT output account.